This is CGTN, China Global Television Network.
Hello and welcome to The Agenda. I'm Stephen Cole. The coronavirus pandemic is set to cost the global economy trillions of dollars. So this week, we're going to be talking about who picks up the bill. Could social distancing spell the end of globalization? We'll get the view of one of the world's leading economists. Is printing more money the way to prevent complete financial collapse? And a moratorium or cancellation? Is it time to write off the debts of the world's developing nations? The COVID-19 crisis came out of nowhere, but its impact has shaken the world. The economic aftermath will be felt for years, if not decades to come, not least in terms of a major recession for the big economies. And the even bigger question is, will it trigger a global debt crisis? Well, even before lockdown, some of the world's major economies were already in trouble, literally swimming in debt. As of February 2020, total US government debt stood at around $23.5 trillion. That's 110% of GDP. Across the Eurozone, it stood at 10.9 trillion. That's 88% of GDP. Here in the UK, it was around 2.2 trillion. Oddly enough, also 88% of this country's GDP. And then came lockdown, and with it, the need to find trillions more dollars around the world in the form of stimulus packages to support businesses and indeed societies themselves. Italy alone, one of the worst hit economies by the pandemic, has promised businesses over $430 billion, the equivalent of 22% of its GDP. The UK package is equivalent to 16% of its GDP. In the US, it's 11.1%, France 4.4%. Even China has promised the equivalent of 1.2% of its $11 trillion GDP to combat the economic effects of the virus. And that could be just the beginning. The IMF, the International Monetary Fund, has estimated that globally, gross government debt will rise by $6 trillion by the end of this year to $66 trillion, or from 105% of GDP to 122%. And this is far bigger than the global financial meltdown of 2008. And the longer the global lockdown, the worse it'll get. The one piece of good news is that with interest rates at record lows around the world, servicing that debt is pretty cheap. And as most of the world's economic powerhouses are all adding to their debts, their relative positions on the global debt league will remain more or less the same. But for more fragile developing markets, the picture could be very different. As France's President Macron reminded the G20 recently, every year, a third of what Africa exports commercially is used to service its debts. And that's before a penny is borrowed to pay to fight the coronavirus. For most countries, and like the European Union, the answer will be to print more money. For others, the only way for those countries to survive will be a moratorium on debt payments, or even debt cancellations. But in the midst of an unprecedented crisis, the questions are, can the rest of the world afford to do that? And what would be the consequences if it doesn't? With me now is the former chair of Goldman Sachs Asset Management, the man famous for coining the term BRICS to cover the rapidly developed economies of Brazil, Russia, India and China outside the G7, and that's Lord Jim ONeill. Lord ONeill, thank you for joining us here on The Agenda. Now, the IMF is estimating the cumulative loss of GDP around the world of an estimated $8 trillion. Now, that is an awful lot of zeros, and it's greater, I estimate, than the combined size of the German and Japanese economies. Where in the world, though, do you think this virus will hurt the most?
My honest answer is I've no idea. It's going to hurt a lot of us a lot all over the world. and it's probably too early to say where it will hurt most, partly because as we speak, many countries are just coming out of blunt forms of lockdown, and the speed of their recovery, if any recovery, will determine the ultimate size of their economic loss for the year.
Are people like you, Lord ONeill, and economists generally around the world, working in the dark on this one?
I think the truth of the matter is that most economists should always admit a bit more than they do that they're working in the dark. I can say that because I don't have any regular professional responsibility to forecast anymore. But I do have 40 years worth of experience of it, and I know all the pitfalls. And I've also been through many, many crises. And every crisis has a different flavour. And when you're in them, they always feel like they may never end, but they do end. And you have to try and look at all the different issues, uncertainties, and challenges and make the best guess you can make. And this one probably has more problematical aspects to trying to forecast than any I've been through.
The media around the world is calling this a crisis. You have just called it a crisis. Is it indeed that, or is it more than that, more than a crisis?
I don't know if it's worse than a crisis yet. It's still very early days. What is interesting to observe is that the stock markets, after being extremely weak in March, particularly in the United States, have recovered close to the highest levels of the year, just 10% or so off the highs. The actual NASDAQ index for technology stocks has actually reached new highs for the year, and they seem quite relaxed. And so it is possible that because of the human toll and the peculiar health nature of this crisis means that we're all completely exaggerating it. It's not impossible that that's the case. I don't think that's the case, but it's not impossible. But we have to wait and see. Certainly, the scale of economic decline in the second quarter to most countries' economies is going to be extremely bad, but we have no idea whether we can recover quickly or not, or if at all yet.
Of course, the virus may well suit technology stocks, but how much of the partial recovery will be down to government bailouts around the world?
It's very hard to say. Linked to my 40 years of experience, I'm very aware that stock markets frequently predict things that don't happen. The famous economist Paul Samuelson once said stock markets predicted 8 of the last 3 recessions, and in the past 2 months it's fallen dramatically and recovered dramatically. But I also would say the stock market does quite frequently also have a peculiar way of understanding where things may go, more than many people that comment about the things the markets reflect. So it seems unlikely to many that we get a V-shaped recovery and the decline ends up being for a very brief but albeit worrying period. But it's very early days to have a confident view, and I discourage anybody from trying to be overly confident about what will happen.
Some doommongers have been predicting that the virus is the end of globalization and going back to slowbalization. Any truth in that, do you think?
So the notion that globalization is now over, I think, is one of the things which is easier to refute. Ultimately, globalization occurs because consumers around the world in different countries want to try and get for their own personal enjoyment the best quality things they can get at the most affordable prices. And so unless consumers are suddenly going to no longer be that important, I don't really see how globalization can end. It might well be some aspects of globalization of the past 20 to 30 years will evolve differently, but I think it's a mistaken yet popular view that globalization is over. There are many examples I could bore you with that show right now it's clearly not happening. Just the remarkable cooperation going on in international pharmaceutical companies and biotech firms searching for a vaccine is one example. The very fact of how we're doing this interview over a combination of modern technologies and the whole rise of the internet and the acceleration of the internet is another. So I think it's rather silly view that globalization is over. I don't believe that for a moment.
The saying is, out of a crisis comes opportunity. Is there an economic upside to any of this?
I would agree with that, but I would also caution that it is very tempting, particularly when there's such human issues at stake, for people to make very bold predictions about big strategic and structural changes. And some may and some may not occur. But in contradicting myself, I do think crises often shape how companies, how people, and how countries adapt for the next era. My own personal circumstances are an example of it. On the back of the horrendous crisis of 9/11 in 2001, that's what led me to create the so-called BRICS acronym, which had a big influence on the world of business the next decade and beyond, and certainly shaped my own career. So I think it's true that we should never let a crisis go to waste, and out of every crisis comes many opportunities.
The world has had more than a decade since the 2008 financial crisis to prepare for another possible global downturn. Has it used that time well or not?
I think the evidence is that it largely has not. So whilst we should never let a crisis go to waste and opportunities come, I think broadly speaking, particularly perhaps many parts of the Western world, have not pursued policies as well as they could have done since the last crisis. It's been dominated by an era of growth that's been led by primarily two places, the United States and China. Europe's been very weak. It's been, more importantly than that, including in the United States, but also much of the rest of the world, we've had extremely weak productivity, apparently never-ending profit growth, and very weak wage growth. And it suggests that many aspects of how capital markets and globalization and the whole theory of capitalist economics is supposed to work hasn't really been bearing itself out the past decade. And maybe this crisis will force us to change more and have a better form of capitalism going forward.
Lord Jim ONeill, many thanks indeed to you for joining us.
My pleasure.
Still to come here on the agenda. Counting the cost of the virus, what can we learn from how China is coping with the financial fallout from COVID-19? On the agenda with me, Stephen Cole, we look up into space. We look down into data. We look at debt. We look at politics. We look at opioids, climate change. We look at all the issues that really matter around the world. But you matter too. We want to tell the stories you want to see and hear about. Make it your agenda. Welcome back to the agenda. China was obviously the first country to face the full impact of the COVID-19 pandemic, but it's also the first to come out the other side of the outbreak. So what lessons might the rest of the world learn from the Chinese economic approach? Well, joining me now from Beijing is Jiang Jianping, Director General of the Chinese Academy of International Trade and Economic Cooperation. Well, last week, the head of China's State Planning Agency announced plans to raise China's budget deficit, increase the quota for local government special bonds, and issue special treasury bonds specifically to fight the virus. Is this the kind of approach countries around the world should be taking?
I think that actually in China right now, there is still enough space to issue, local treasury bonds. Meanwhile, if you look at China's, fiscal deficit for the whole country, actually only about 3% this type of level. I think that's a safe line for sustainable, fiscal policy. But if you look at other countries in the world, maybe different countries have different situation. So you have to look at, your domestic situation, and if you can make your fiscal policy could be more sustainable for the medium and the long run. Also, I think that every country needs to make a very careful assessment and then make their decision.
The Chinese economy contracted as China was the first to enter, but also the first to emerge from this pandemic. Is there any reason to suppose it'll get worse or better economically in China for the rest of the quarters?
Yeah, of course, for the rest of the quarters, it seems that the situation is getting better. We hope that this type of situation can last for the rest of this year and the next year. Also, I noticed that, IMF already predicts that this year China's, annual growth rate will be positive. Actually, that China's situation, of course, is quite different from other countries, just because in recent years, China's economic model is more relying on new economic driving force such as AI, 5G, and high-tech sectors development. Meanwhile, consumption also becomes the major driving force for China's domestic demands. Consumption's contribution to China's GDP growth rate already estimated about 70%. Meanwhile, in China, new economic models such as e-commerce and fintech has been developed rapidly. Especially right now in China, we released the new FDI laws and regulations. In China, 18 provinces already set up their free trade experimental zones, where both domestic enterprises and foreign-funded enterprises, they can compete on a very fair market environment. So in this regard, I think that in the rest of this year, China's economic situation could be better.
Several EU countries have already moved into recession, including Germany's biggest, or Europe's biggest economy, Germany. What is the key to save an economy, rescue an economy in the post-coronavirus era? Is the pandemic going to change the way, in other words, that those countries deal with debt?
I think that it's too early to say the pandemic, change the way of globalization and international cooperation. So at this moment, I think that international cooperation would be very critical. Because that the Earth is just a small village, facing with globalization time. Also, every country, we already link each other. We are relying each other. Especially pandemic is so strong and it's not easy to deal with, and any single country cannot deal with the pandemic. So I think that the first step we need to work together more closely and control the coronavirus. And the second step, we need to promote, closer and closer international economic cooperation in order to deal with economic recession issues.
Professor Jun Jianping, China Ministry of Commerce, many thanks for joining us on The Agenda.
Thank you.
When countries are on the brink of bankruptcy, there's one man they all want to talk to. He's Lee Buchheit, and he's a sovereign debt advisor who, amongst many other achievements, engineered Greece's debt restructuring in 2012, the biggest in history. So what does he make of the COVID debt crisis? Let's find out now as he joins me from Millbrook in New York. Lee Buchheit, thanks very much for coming back to The Agenda. The world was already swimming in millions, trillions of dollars of debt. What difference is this pandemic making?
I might have used the word drowning, Stephen. We entered this crisis with record levels of debt, both in the developed and the developing world. The assumption had been that the markets would always be there to allow these countries to roll over their maturing debt, and therefore the size of the debt stocks was thought to be less important than perhaps it had been in past periods. COVID-19 has changed that. We don't know when this crisis ends or abates even, and we don't know what the world economy will look like when it does. What will export markets look like? What will commodity prices look like? What will financial markets look like? We entered 2020 with a handful of countries, Argentina, Venezuela, Lebanon, Ecuador, that had already announced that they needed to restructure their debt. We will leave 2020 with a much longer list than that.
The Eurozone in particular seems to be having major debt problems and division between North and South. George Soros has been predicting possibly the end of the EU because of this pandemic. That's pretty big talk.
It is indeed. The Eurozone has one great advantage, and that is the European Central Bank. And the European Central Bank has launched itself on a program to buy the bonds of European sovereigns in astonishing quantities. And that keeps those countries with access to the capital markets at tolerable interest rates. That's an enormous advantage. Many emerging market countries, of course, will have no safety net of that kind.
Well, as you say, the European Central Bank has come up with the so-called coronavirus bonds, but it's also promulgating quantitative easing, which in layman's terms means just printing more money. Is that the answer?
Well, printing more money helps in a financial crisis. It keeps the markets from seizing up. The longer-term consequences of the quantitative easing that is going on, not just in Europe, it's going on to a massive degree in the United States. The longer-term consequences we don't know. We've never seen anything like this. That much printing of money in such a short space of time. Many economists would say inevitably there must be an inflationary effect of that. Of course, it will be subdued in the short, perhaps medium term, by the collapse of the employment markets and many other distress situations in the economy generally. But we don't know the longer term effect of this. It is, however, absolutely extraordinary that we should see central banks prepared to monetize vast quantities of sovereign debt to the point that the central banks own significant portions of the sovereign debt issued in this country by the United States and in Europe by the members of the European Union.
The United Nations Conference on Trade and Development is calling for a global debt holiday for the developing world. Is that likely? Could that work?
Well, there are two calls being made. Some are calling for debt cancellation, that debts maturing during this period of crisis would simply be canceled. The G20 has called for a deferral, a standstill on debt service payments by the poorest countries. These are the countries that belong to what the World Bank calls the International Development Association. They are the 76 poorest countries in the world. The G20 has said that bilateral creditors will or have been asked and have agreed to suspend collecting debt service for the balance of this year from those countries. There is a question right now as to whether commercial creditors, private sector creditors, will match that generosity.
Lastly, Lee, is this the bleakest global picture you've ever seen for the economy?
I'm afraid it is. The last time we had anything resembling a systemic sovereign debt crisis was in the early 1980s. That crisis afflicted commercial banks. They were the lenders of that era, and 27 countries had to go through a debt restructuring that wound up taking more than a decade. I don't think we know how many countries will exit the COVID period needing a full-scale debt restructuring. I've seen all kinds of predictions, anywhere from 10 to 50. 100 countries have asked for emergency assistance from the IMF. That's more than half of the membership of the IMF. It will turn, Stephen, on how quickly this crisis can be brought under control and how quickly the world economy can return when it does. I don't think any of us know the answers to those questions, but this could be a systemic sovereign debt crisis of the kind that we haven't seen since the 1980s, and perhaps it will even dwarf that one.
Lee Buchheit, Sovereign Debt Advisor. Many thanks to you, Lee, for joining us again on The Agenda.
Thank you, Stephen.
The Bank of England is predicting that the global pandemic could cause one of the worst recessions in modern history. According to the EU's economy chief, Paolo Gentiloni, the European Union is bracing itself for what he called a recession of historic proportions, an economic shock without precedent since the Great Depression. The IMF is predicting a global GDP loss of $8 trillion. These are huge numbers, but they are all, at the moment, estimates. No one yet knows what will be the true cost of COVID-19. We do know it's not going to be cheap. In the UK, the Treasury has just revised its borrowing plans for May to July up to £180 billion. That's 4 times what it planned to raise. So how are we going to pay for all this spending? There is the suggestion of a one-off wealth tax for more taxes on savings, but a tax on those diminishing rainy day funds won't go down well with the electorate. Another round of austerity is a possibility, but I think that's politically unlikely. So what should governments do? Well, for a start, they need to realize there are no precedents to follow. We've never locked down an entire global economy before, and there's lots we still don't know about the long-term economic consequences of doing that. Now, in 2008, Britain played an important role on the international stage, catalyzing a coherent global response to the financial crisis. With America embroiled in its electoral politics and the EU racked by another existential crisis, the UK needs to step up once again and steer the euro economy away from the rocks of depression. Coming up on a future agenda, can the airline industry survive the COVID outbreak, or is this the end of air travel as we know it? Well, that's to come, but don't forget, for more agenda content, you can visit our website, or you can follow us on Twitter and Facebook. But for now, from me, Stephen Cole, and all the Agenda team here in London, it's goodbye.